Friday 19th January 2024, I made an important trade that would forever change the way I manage my trades and ultimately alter the path of my trading career. It was an obvious play. Tech company with a relatively low float size gapping up on huge volume due to a major catalyst. Have you guessed what it is yet? It was SMCI. Now you might be thinking, why on earth would you regret this trade? It made a freaking ginormous move. Well, guess what? I wasn't part of 99% of the move, and you're going to laugh when you see where I exited. Are you ready to be shocked? Well then, let's get to my entry. Before buying a stock, I always make sure that it ticks most, if not all of the boxes I'm looking for. From a technical standpoint, SMCI had been going sideways for around 4 months. Price was close to all-time highs, which means there's little resistance above, and price action was fairly stable. These are all good signs, so I immediately put it on my watch list. Now let me walk you through my trade. So during the closing hours, I saw that price had gapped up over 12% on news that the company raised sales and earnings guidance significantly. I was fully aware that the company had earnings on the 29th January, less than 2 weeks away. This wasn't a problem since there's still enough time for a decent move to happen before that date. I would usually avoid buying stocks within a few days of their earnings. So the bell rings for the market open, and 5 minutes later, relative volume was around 900% and price had closed a hair below its all-time high. My entry was spot on. As soon as the price broke above the high of the day and its all-time high, I pulled the trigger at precisely 9:35 and 11 seconds. My cost was $358.97 per share. This was before their 10-to-1 stock split in September. Now all I could do at this point was to sit and wait for the stock to do its thing. And boy did it do its thing. Within an hour, it hit my target of 2.5R. In other words, I was risking $1 to make $2.5 back. Well, I had actually made a calculation error and got back 2R instead, but that's not really the main point here. It's not often, in fact it's uncommon for me to hit my profit target on the same day of entry. It usually takes at least a few days. So you can imagine how chuffed I was with myself at this moment. I had just banked good profits in a short space of time, swiftly in and out, just how I liked it. Before this trade, I would settle on targets of 2 to 3R for each trade. If I hit the target, then I'd sell my entire position, no questions asked. I really didn't like staying in trades for any longer than a few days. The way I saw it, it didn't matter what happened after, I should just be happy with what I had made. But in the days and weeks that followed, I kept hearing the voice of Gordon Gekko in my head saying, greed is good. With each passing day, I saw the price of SMCI gradually climb higher and higher. I kept thinking to myself that it couldn't possibly go any higher. But it did. My entry was $358.97 and it reached a peak of $1,077.87, all within 1 month. That's a 200% increase. I wasn't mad or upset. I was actually amazed, and by the end of its move, that amazement turned to regret, as I had come to the realization that I had just missed out on a trade that could have bagged me over a 10R return. These moves don't happen often, and when they do, you better ride them for as long as possible, because these are the types of trades that really move the needle in your trading account. Immediately after SMCI had this mental run, I went to work. I looked at all of my past trades to see if I would have actually been better off by leaving some of my positions on. And based on my analysis, I discovered that despite many of my trades failing to have any follow through after my target hits, therefore there was no benefit holding on to the position. The ones that did follow through, however, would have gone on to erase all of my losses with change to spare. So it was apparent to me that I should always trail at least some of my position, which is what I began to do. So from that point on, I had decided to sell 35% of my position at my first target and trail the rest. I would only exit if the price closes below either my faster moving averages, a higher low, or the previous day's low, all depending on the nature of the move. So if the move is very explosive, then I will trail my stop more aggressively, simply because the faster a stock moves up, the faster it crashes back down. This new method of managing trades would give me the best possible chance of riding stocks that make the biggest moves. Of course, I'm never going to catch the top, no one ever does, but as long as I catch the meat of the move, then I'm happy. Now all I had to do was find these big winners, and little did I know the next big mover was just around the corner. That's a story for another video, but to give you a clue as to what it was a mid-cap biotech stock. Thanks for watching, and if you enjoyed this video, just hit the thumbs up and subscribe for more swing trading tips. See you in the next video.